So industry overview I mean, once you have focused on the functional analysis, which is the most important part, industry overview is about the overall industry in which the company operates. For example, if you are in the uh, manufacturing industry, you will explain the manufacturing, whether you are manufacturing plastic, what is the performance of the plastic goods industry, whether plastic goods industry is growing in size, and then explain why you are equal and can be placed within the plastic industry. You're not different. The plastic industry is growing, polyprop or maybe trading business in which you are is growing, then you should also be broadly in the same industry. That is why the industry overview is important. Subsequently, we have the slides on move ahead, please. The economic analysis, which is the most important part, the second most important part in the transfer pricing local file, because this explains as to how you have determined and benchmarked your transfer pricing. So if a company has various transactions with related party, that is payment to directors, payment to various suppliers which are related party, or it has received some goods from related party and made payment for purchases, or has received money from outside India, outside Dubai, then you have to do the economic analysis. To do the economic analysis, this slide tells you the process. First step, select the tested party, which is on which party you will do the analysis. That is the least complex entity. Selection of the most appropriate method. You have 5 methods. You choose the best method amongst the 5 methods. Then choice of the relevant profit level indicator. This means that you have to choose whether you are whether you are finding justifying your transfer pricing based on operating profit by operating cost, or you are justifying based on operating profit by operating revenue. Means how do you are computing your profitability. Then you do a search on point number 5 and 6 by using the transfer pricing database, which is DVD or a Thomson Reuters. These are independent database available, which are relatively taken by large professional firms, and from where we can find as to how the companies which are comparable to you, that is from where we find the market price. Many times your many questions I have seen asking, how do you find the market price? You find the market price in case of TNM method by using these databases. And then you summarize the arm's length return. Please note, it is very difficult for any taxpayer to do this in-house. You need to take the assistance of professionals to do the economic analysis, to do the functional analysis, because of the complexity of transfer pricing. Now, having said this, I think you have now gone through and understood that local file, which is asked by the Dubai Tax Authority, how do we prepare this? You should have the local file on record after the end of the financial year. We can move to the next slide. And then comes the master file. Master file, as GB has explained in the past, if you are a part of a big group and your group has companies in Europe or India or US, there will be one master file prepared by the respective group entity, and you can request the same master file and furnish the same to the Dubai Financial Authority. The master file requirement is linked to a certain threshold which the Dubai Financial Authority will prescribe. I will not go in details with master file because this is something which may not be applicable to all taxpayers. Specific questions are welcome, and we shall answer this at the end of the webinar by way of email. Now, move ahead, please. Please, next slide. Some other specific provisions. Now, there are some detailed provisions which have been touched upon in line with global best practices. Now, as Dubai moves to the new era of transfer pricing and corporate tax, they also want to give more certainty to taxpayers that don't be afraid. It's a very good, it is the same old good Dubai. The only thing is we have some laws. So they say if you want certainty that I do not want to get into any litigation, then you can go to the Dubai Tax Authority and say and give them all the data, and they will give you an advanced pricing arrangement, APA, as per Article 59. That APA means your transaction is okay from Dubai Financial Authority right from day one. As of now, APA is given by every developed nation. But in our case, it will come up in detail. APA guidelines will come up. As of now, we know it is coming, but it is not finalized. Second point, corresponding adjustment. Again, it is provided that if an addition is made in Dubai, similarly, we can get us benefit of the same adjustment in other jurisdiction. Again, this is a point subject to every developed transfer pricing nation is providing. As of now, it is in a kind of a pipeline. We'll get detailed documentation or detailed guidelines on the same. This is not simple. Corresponding adjustment is through a MAP process, which is relatively longer process, takes upon a year and a half. You can ignore this because this is something when you get into a litigation. Most important point, free zone. And I think GB will add on this. Article 18 says that the UAE corporate tax is eligible for 100%, is basically subject to the UAE corporate tax regime at 0%. So it means free zone continue to be taxed at 0% corporate tax. But when the free zone is making payment or receiving services from related parties, or paying interest or paying salaries to a related party or a connected person, every such transaction needs to be in accordance with transfer pricing, arm's length price. So free zone is also required to make the transfer pricing documentation and disclose the same to the Dubai Financial Authority. Although we expect some clarification here, but right now the law says it should be applicable. GB, anything on this free zone thing you want to add? You may please go ahead.
Yeah, regarding free zones, there is still a misbelief that free zones are not subject to UAE corporate tax. That is not the case. Their tax rate would be 0 if they meet certain conditions, but they need to follow all other rules and regulations specified in the law, including transfer pricing. The transfer pricing is one of the conditions which enables a free zone to qualify for this 0 rating. That is specifically mentioned. Not only that one, all other conditions like registration, submission of returns, everything has to be followed. So if anybody is still thinking that I am a free zone person, this is not applicable for me, you should just completely forget about that understanding and make sure that you are also a tax, just understand that you are also a taxable person as good as a mainland company. Only thing is that you may get a special relief of 0% if you meet certain conditions, which includes meeting enough economic substance. And when we talk about economic substance, it is important that place of effective management rule will be applicable, that we will be taking a special session regarding that one. So it is just not like a director who is a resident of foreign country comes here and make a decision, or he comes only to make a decision. It may not be counted as having a place of effective management in UAE. These kind of things we will discuss in another session later. So we can move to next slide. Again, this general anti-abusive rule I already explained in the previous session. There also it was clearly mentioned that when you close the previous year financials, arm's length principle has to be followed. Again, regarding the foreign PE, any transfer of assets or liabilities between a resident person and its foreign permanent establishment shall be treated as having taken at marketplace at the date of the transfer. Market value as per the decree is equivalent to arm's length. So market, wherever it is mentioned market value, you just link it to arm's length and transfer pricing. And interest deduction, same. I mean, you cannot take a loan with a higher interest rate, and in opposite way, you cannot give a loan maybe without any interest also. It should be linked to markets. Amit, if you want to add something.
Yeah, we can move to the next slide. I think we are here now on the end of the webinar where we are talking of the services. So GB, over to you. I mean, we can move to the maybe slide 36, which is better, more. Go ahead, please. Yes, what all we do for clients. Yes, please.
So we are ready to
You want
serve
to take.
you with the transfer pricing advisory and transfer pricing compliance requirement. Under transfer pricing advisory, we can do the preparation review of intercompany agreements for the transactions under consideration, benchmarking analysis and determination of remuneration mechanism for the transactions under review, transfer pricing, planning and advice on intra-group services, management changes, royalty and other transactions, determination of profit contribution to permanent establishment. See, these all things you should not wait for your financial year to start with. You need to, do these kind of activities right now. That is very important. As I said initially, the law is effective from October 18, and the transitional portion says that you must close the financial year using using the rules and regulations of UAE Corporate Tax Law, and they have specifically mentioned about the transfer pricing requirement like arm's length pricing. So you should not wait. You should not think that you have enough time. Suppose if your first financial year for tax purpose starts in January 2024, you should not think, and your first return will be due by September 2025 only. So you should not think that, oh, okay, I have enough time till September 2025 to do all compliance requirement. No, it is not the case. So you should be aware about the importance of having a planning in advance and do this kind of homeworks and be ready with the corporate tax when it comes or when it is applicable for you. Then regarding transfer pricing compliance, we can do analysis of transaction that would be covered under the UAE transfer pricing regime. Assistant preparation of local file laws, already Mr. Amit told. Assistant preparation and filing of disclosure form. We don't know whether it is mandatory to submit along with return, but it should be ready. And because there should not be any mistakes while you submit the returns. And we can also assist if you need in creating the master files.
We can do, in fact, yeah, every kind of service which you need under one roof for transfer pricing, as also guide you on the preparation of the local file and do the preparation completely in-house. And we can advise you on the arm's length pricing of the transaction and also to structure the transaction so that you do not have any questions from the regulatory or from the Dubai Financial Authority. The GB team is supported well by experts. So that's where we can assist you on all transfer pricing aspects. I think that's the message that you all are that you could take home. And further, you can ask further questions. There are many questions which we have attempted to answer. Further questions will be answered on email and by our team.
Yeah, maybe we can take few questions. 4 or 5 questions.
Yeah.
Can you answer some open questions? We already answered few.
Yeah. So they said Abhishek is asking under RPM method for items purchased from related party and sold to various clients by maintaining the same unit price for all clients for similar goods will be correct. So Abhishek, under RPM method, if you are selling same units, if you're maintaining the same price for all clients, third party clients and related party clients, ideally the answer will be yes. Then you have followed the correct transfer pricing policy and you can justify the correct transfer pricing policy. But the margin that you earn from selling to third party and from selling to related party should also be matched. You cannot have different margin for the two sets of customers. So this you will document in your local file. Now, again, we have the question. I think this satisfies Abhishek. I have a question from the company Black Pine, which says they have two sister companies, one in the Dubai Free Zone, another one is in Serbia. So they want to know whether they have just one transaction. They have just one transaction between the Free Zone company and the company in Serbia. If the transaction is uh, one, and I don't know the nature of transaction, assuming it is purchase of goods, then in that case, we would need to have the transfer pricing document, but we would not, there would not be additional taxes on you because free zone company are anyhow subject to 0% tax. You will need to prepare the local file only. You need to prepare the local file and file the disclosure statement for that transaction. But this company is very new, Tamara. So basically, since it's opened in September 2022, the first year that would the law is applicable is from 2023 June. So I guess from next year you would be required, not from this year, but you should be prepared. You can have a detailed discussion with GB on this. Now, then there's a question from Seeger. He says that are these transfer pricing method also applicable on purchase by UAE companies from related parties? So when a UAE company is making purchase from its related party, which means entities in common control in Dubai or in US or in India, then transfer pricing is applicable. Transfer pricing is applicable, and you need to maintain the local file to demonstrate that your transaction is at market price, is at arm's length price. Which method? I can't say which method because that would depend on the functional asset and risk analysis. I think other questions I have answered, and there are a few other questions which are very specific. Indra has asked a question that if parent is in India and subsidiary in UAE, what % profit should be maximum as per your opinion? So remember, the profits in UAE is dependent on the nature of business. Now, if a UAE company is doing manufacturing of a very complicated item, let's say it is manufacturing mattress or is manufacturing pens. So in manufacture of pens, we will use the database, that is transfer pricing database, to say how much margin manufacturing of pens other companies are earning. And I know the answer would be like 14% because we just did that. So maximum you can keep is 14% or 15%. So it all depends on the nature of the product, the complexity, and who owns the brand name and who owns the intellectual property. So these questions need to be seen. So you mentioned it's a service company, and if it's a service company, Indra's question again, she's mentioned it's a service company. If it is a service industry, then we will do that search on the service industry database. So then we have to go through suppose you're doing management of software, then maximum margin in UAE depends on how many people you have there. I don't know how many people you have there. Suppose you have only one people, very less margin. Sonam, reimbursement of expense from parent company. Reimbursement of expense from parent company. You know what is reimbursement? Reimbursement means UAE company makes payment to a travel agent of 500 or 50,000 dirhams because it's another company in India says, I cannot make payment to the travel agent. Please make the payment of 50,000 dirham. So UAE company does what? UAE company takes 50,000 dirhams from India and makes the payment to travel agent. Now in this transaction, UAE company is just taking reimbursement. It is taking the payment from India and they're just making payment to the travel agent. Their transfer pricing will apply only for disclosure, but no benchmarking, no economic analysis. I mean, it's a simple disclosure and would not require a detailed functional analysis or an economic analysis. So it's simple to demonstrate.
But here it's very common that see, it may not be a reimbursement of expenses means it will not be against a particular expenses or something. There is a situation where maybe in a financial year they will count the all expenses from their books of accounts, and they will issue one debit note or something to get it reimbursed. So that cannot, it may be counted as against a service, right?
No, yeah, you're right, GB. So the answer has to be every reimbursement has to be against a back-to-back invoice. And the OECD guideline says reimbursement is permitted for non-core activities. Non-core means that I do reimbursement just to help someone. For example, I help pay him electricity bill. I help pay him, for example, travel. He visited Dubai. He cannot pay the travel agent. I helped him. It is just a facilitation, not
Yeah.
that can substitute reimbursement for service. So it is very
And
specific.
it's also common here that a salary paid by a company's employee, people are considering it as a reimbursement. Maybe
No.
a part of his that employee may be working for the parent company or for their requirement.
That is
So
not allowed, sir. That is not allowed. That would
yeah,
be erroneous to say that reimbursement is permitted. That is not reimbursement. Reimbursement doesn't mean salary reimbursement. So that will be covered under transfer pricing regulation. You will have to do the TP local file, benchmarking, and economic analysis. Alessio, when selling to end users, the margins are much higher than when selling to local distributor. How can such differences be accepted? Alessio, the difference can be accepted by establishing that when I am selling to outside to my third party, the margins are higher because I have done more value addition. I have put in more people. But if you are saying it is there are no such differences. So first you have to identify the difference, why there is a difference. Then transfer pricing can help you make documentation for the same. Sometimes we say that the difference can be justified using geographical differences. For example, that when you sell to someone in Amsterdam, we tell them we are selling expensive because Amsterdam is an expensive market location. I sell a pen in India for 5 rupees, but I'll sell the same pen in Amsterdam, or I'll sell the same this pen in Europe at maybe $3. Plus, there is a transport cost, logistic cost, and the risk also, payment risk. So there could be reasons why you are selling higher. We can justify that. Yes, Jaxa Group is the primary point of contact. One
yeah,
question was
I
that.
think we will answer the rest of the questions through emails later.
Yes.
We have your contact, so I think it is time to wind up. It's already 90 minutes.
Yes. I thank you, GB, for giving us the pleasure to speak to everyone here, and it's been a pleasure interacting with all the participants. And wish you a very compliant transfer pricing regime under GB. Thank you.
Yeah, thank you, Amit and team.
Okay,
Thank you, everyone.
Thank you.
Okay, many thanks to all our speakers for this amazing session. And as informed earlier, we'll be answering all your questions which are unattended via email in coming days. And you can always reach us on this contact information displayed in the slide. And many of you have requested for the recorded session for these classes. And we are working on the same, and the link for the YouTube videos will be shared to you. And coming soon, we will be conducting more sessions on this tax and related topics. And we appreciate your participation for the same also. And thanks again for our speakers and all the participants attending this. And follow us on LinkedIn page for more updates. Every update will be on our LinkedIn pages, so you can just follow the page and you will be having YouTube videos, link will be there, or future sessions will be there on our LinkedIn page. Thank you.
Thank you.